Welcome to Explain the Charts, where we delve into the world of financial markets by combining news and technical analysis. Today, November 15th, we're looking at Intel Corporation, a tech giant that's been making headlines lately. Recent news surrounding Intel has been a mixed bag, with some positive developments and some challenges. One of the major developments is Intel's potential to receive $19.5 billion in federal funding through the CHIPS Act. This funding is crucial for Intel's expansion plans in Ohio, Arizona, Oregon, and New Mexico and would boost domestic chip manufacturing. However, there are concerns that the funding might be delayed or even canceled under the new administration. The new administration's stance on the CHIPS Act funding could have a significant impact on Intel's future prospects, and investors are closely watching the situation. Beyond the CHIPS Act, Intel is facing other challenges, including competition from rivals like NVIDIA and Taiwan Semiconductor Manufacturing Company, TSMC. NVIDIA, in particular, is having a banner year, fueled by the demand for artificial intelligence, AI, chips. Intel is trying to catch up in the AI race, but it remains to be seen how successful they will be. Furthermore, Intel is navigating a challenging macroeconomic environment, with inflation still a concern and potential economic slowdowns looming. These factors can influence investor sentiment and affect Intel's stock performance. With these news and events in mind, let's turn our attention to the charts to see what they tell us about INTC's current position and potential future trajectory. First, let's take a look at the daily chart. The daily chart paints a broad picture of INTC's recent performance. We see that Intel has experienced a significant surge in price since July, moving from around $32 to over $40. This rally seems to have been fueled by a combination of factors, including the positive news surrounding the CHIPS Act. However, we also see that the stock has been consolidating recently, trading within a range of $38 to $40. This consolidation suggests that traders are waiting for further clarity on the CHIPS Act funding and Intel's overall performance. Now, let's zoom in on a specific range of candles to highlight this consolidation phase. We'll focus on the candles from September 18th to November 14th. Here, we can see the stock trading sideways, with clear support and resistance levels. The support level appears to be around $38, while the resistance level is around $40. This range represents a zone of indecision, where buyers and sellers are battling for control. The breakout of this consolidation phase will likely dictate INTC's short-term direction. If the stock breaks above $40, it could signal a renewed bullish momentum, potentially leading to further gains. However, if the stock breaks below $38, it could signal a shift in sentiment towards bearishness, potentially leading to a decline in price. Let's look at the 1-hour chart to gain a better understanding of the recent price action and identify any potential trading opportunities. The 1-hour chart shows a more granular view of the price movement. We see that Intel has been trading in a slightly narrower range on the 1-hour time frame, with support around $39 and resistance around $40. The 1-hour chart also reveals some interesting patterns that could provide insights for traders. For example, we see a potential head and shoulders pattern forming. This pattern, if confirmed, could suggest a bearish reversal, potentially leading to a decline in price. However, it's important to remember that patterns can sometimes be misleading, so it's crucial to analyze other indicators as well. Another aspect to consider is the recent volume. We see a significant increase in volume on the 14th of November, which coincides with Intel's strong trading day. This surge in volume indicates heightened investor interest, which could be a sign of potential volatility going forward. Now, let's switch to the 15-minute chart to see if there are any shorter-term trends that can provide further guidance for traders. The 15-minute chart offers a more detailed view of the recent price action. We see that Intel has been consolidating within a relatively tight range on the 15-minute time frame, with support around $24.85 and resistance around $25.05. This consolidation suggests that traders are waiting for a catalyst to break the range. A break above $25.05 could signal a short-term bullish move, while a break below $24.85 could indicate a short-term bearish shift. However, this consolidation is relatively narrow, indicating that the price movement may be less pronounced than on the daily or 1-hour timeframe. To summarize, the charts are showing a mixed picture for Intel. On the daily chart, we see a consolidation phase, with support at $38 and resistance at $40, indicating a zone of indecision. The breakout of this range will likely dictate the short-term direction. On the 1-hour chart, we see a slightly narrower range, with support around $39 and resistance around $40. We also see a potential head and shoulders pattern, which, if confirmed, could suggest a bearish reversal. However, it's important to analyze other indicators as well. The 15-minute chart shows consolidation within a tight range, with support around $24.85 and resistance around $25.05. A break of this range could signal a short-term bullish or bearish move, but the range is narrow, suggesting that the price movement may be less pronounced. Overall, Intel's stock price is currently in a state of flux, with several factors influencing its direction. Investors and traders are waiting for more clarity on the CHIPS Act funding and Intel's overall performance, which could provide a catalyst for a decisive move.